What's going on, guys? This is Terrence Ray, and I'm back at you with a weekly stock market update. I am currently doing this while the futures market is open. I'm doing the videos a little later than usual, so we kind of get on a Sunday. We kind of get a chance to see how the futures market is looking. As you know, it opens up on Sunday afternoon or Sunday evening. And you can see right now, currently, we have the S&P 500 futures down about 0.5%. So is the NASDAQ futures, the Dow futures, and the Russell futures. They all four down about 0.5% over here. And we had the VIX futures up about 2%, almost 2 and 3 quarters. Excuse me. So with that being said, let's get right down to it. Now, as we can see, I'm gonna pull up a weekly chart we'll look at the SPX. Now, for the week, for the week on the option part, you can see we have an expected move when I come from the option chain of 159.38. Now, ordinarily, that's a large expected move, but the past couple weeks it's been larger than that. So compared to what we've had, it's not as much as it's been the past 2, 3 weeks, but that's still a large move. So what that tells us is that we can expect some, to be whipsawed through the week. Now, what I would like to talk about and show, I'm gonna pull up the SPY because I already got it highlighted on here. You see right here, we have a Harami, right? This is my favorite trading candlestick pattern. This is my favorite pattern. When I see these like this, it doesn't necessarily tell me what direction, because in this case, with that expected move, we could get a big move either way. But that does tell me to expect a big move. I just don't know which way. Now, I'm going to go intraday and we'll look at the SPY on the intraday. And you can see what it looks like. So you kind of see we had a low, a high, a higher low, because this low is higher than this one, right? A large move out of here. So now we got a higher high intraday, and then we got a little trading range here, right? Now, and I already have a put spread put on that I put on. I don't remember exactly when I did it, sometime last week. And you can see I'm sitting right here, right? Sold the 520, bought the 515. And now what I'm looking for is, a bump to the upside. If I get the move that I expect, I'll be able to take that trade off for profit, right? Now, if it goes against me, then we'll just have to see what I need to do, right? Maybe roll out, buy some more time or whatnot. But we can expect a big move this week. Now, with the futures market opening down as it is, you can see if this continues to hold by the morning time, I could be underwater in that spread. So then I may have to roll out tomorrow. But we'll see what it looks like on Monday at the open. I'm gonna go right back to the SPX and I want to go to the weekly chart and I want to show you guys something. Why I consider what we're in now to be a bear market. This is a 3-year weekly chart, meaning that each candlestick is a week or represents a week of trading. And you can see how for the past 3 years, after this little lull down here, we just kind of just been drifting higher, right? And once we crossed over, we had a little bit of a down move right here. And when was this? This was July. It started July 31st of 2023. And you can see we went down some, right? Now, from that low, we get this big green candlestick here, and we kind of really never looked back. Had about 3 weeks of down moves, to the sideways, 1 week and 2 weeks down, pull back and then higher, pull back and then higher. And we just kind of drifted till it rounded off up here. Myself, no matter what the news says, we got tariff talk, we got trade war, we got We got a lot of stuff going on, bond market fluctuation, whatever you want to call it. This particular I can't talk, sell off is actually, in my opinion, a good um, is a good sell off to me. This makes for basically a good buying opportunity for a lot of stocks that maybe you didn't get a chance to get in at, and you got a good price that you can get in now, especially on stocks that you like. Now we can see right here we got this big green candlestick right here, right? Where you can see the bulls came in. Then we got a pullback last week. So here we are on this chart. I'm gonna bring it in so you guys can see it a little bit better. Now down here on my squeeze indicator, you can even see that it's squeezed right here. We got 3 dots. So for red dots. So for 4 weeks, you can see we were right here going sideways. I should have caught this, but I very rarely look at the weekly chart. I'm just looking at it now because of the large move that we have. And you can see like this is a 9-day simple moving average. The white line is a 20. So this case would be 20 weeks, 9 weeks, and this is 50 weeks. So we are in a bear market, no matter, in my opinion. Now, this week I am going to start nibbling on the long side in my long-term portfolio. I'm gonna start buying some stocks, some stocks that I like, that I think uh, can have the potential to do better long term, more long term plays, not necessarily like trading in and out. So I will start to nibble on the long side this week. Yeah, there is no perfect time, in my opinion. This market can continue to go down, right? To be honest with you, I see a support level right here on the weekly at 4,800. And we got all the way down to 48.35. So if you're looking at that, that's just, I'm gonna show you exactly what I'm right here. So we kind of got there, almost kind of sort of, right? The next level down, if it breaks, comes down and want to take this low out, which is possible, I can see us getting all the way down to 4,600. That's very possible. So, however, I've seen times where you don't get, you get something like this, which this already covered that much of a down move already. You get something like this, and then it just takes off, and you never get an opportunity to get back into the market. So I'll start nibbling and just start buying, even if it starts going down. I'll just continue to buy. To build up, my long term portfolio. I had sold out of equities, and I think it's time to, start nibbling on the long side. Now, intraday wise, like I said, I could I wouldn't be surprised to see a bounce this week. Same thing in the Qs. Let's look at the triple Qs. We're gonna come in here and look intraday, drop down, look at the hourly chart. It looks the same. Now, I'm gonna take these off. You can see the same thing, low, high, higher, low. Right here. Big move here, higher, high. And then we got this range right here. So just depending on what we get on Monday, we could get a break out of this range, right? Now, if we get a breakout, you could trade it either way. To be honest with you, you could do it. It's something like you got something here, you draw your trend line here, intraday, and then look to see what you get coming out of this range. Let me go ahead and save that. So if you were on the triple Qs, you get something here. Me personally, I don't like. I don't think I would short this breaking out of here. I'd rather get long coming out of here. However, you can trade it however you see fit, but this is a range, and the longer it stays coiled up in here, is the larger the move makes for when it actually breaks out. Let's take a look at now. I got 3 other stocks that I ran scans for, and we're gonna go ahead and pull those up then I think you might be able to make some shake. Boeing, look at Boeing. Boeing is trading in a range as well, right? Let's move this over. I'll have this trend line looking something like so. And this, same thing, kind of a range, right? You got your low, high, low, break out of there, get in a trading range. So a lot of times when you get that 1, 2, you get your 3, then 4 is your trading pattern, and then 5 generally be boom, right? So could get a false breakout and then go this way. But either way, I like Boeing this week for intraday trade. Now, you may ask, like, if it breaks here, what are some take profits levels? Yeah, it would have to be something maybe 168. So it's almost like $7 from here, basically. You might get it to 168. You got a little bit of a gap here, even though I don't think it'll run straight to 180. It's possible, but I like it from here maybe to go to 160. We'll call it 167, 167.50. And if you played the break of this high right here, you could take it to there. Now, if we break down, I don't like shorting this. So I wouldn't even give, it's not like it can't though, but I just don't, I wouldn't take it short. Not looking at, and one of the reasons why I wouldn't take it short is because you got this big green candlestick right here. So generally when you get this pullback here, once you get this range, we generally see continuations. Like this will be your pole, your flag, and then boom. And then out of here should equal this area here. So I like it to get on the long side. ADM, I have no idea what this stock is. It came up on a scan, and you can see this is a long range, right? Just in this range going down. And then you can see we got some divergence down here at the bottom. You can see right here we got this engulfing candle right here. Now this is a daily chart, and we got this big green candlestick right here. So I could see it going right on up through here, or at least going up here testing it at 50. It may go up here, pull back, consolidate, then boom, go higher. But I definitely like this trade set up here. Now this one is a little bit more tricky. Gold, and you may say, well, look at it. It's overbought. Gold is crazy overbought. Now, the thing about it is, momentum wise, it's continuing on the oscillator to go higher. So we don't yet have divergence on the oscillator, right? That doesn't mean that you can't short it. It even opened higher. If we're looking at the futures market, let's pull up the futures. It's up right now in the futures market. Currently, it's up 30 bucks, almost a whole percent currently. So even here, in the overnight market, it's up. I do think at some point we're gonna get a yeah, at some point it gotta come down, right? You just can't keep, I ain't gonna say it can't, but generally we've seen this before, right? At some point we get a pullback. Let's look at the weekly. Like it's overbought on everything. Look at this. This is a weekly chart. It's overbought on the RSI. I'm looking over here at my RSI numbers. Got a 76.9 on the RSI. On my stochastic, got like a 95.9. So at some point, we'll get a little bit of a pullback. I don't know if you want to play for that, but if I were going to short it, how would I short it? You ask. I would do something safe, something small, like a put spread. You could come in here. You can actually do this in the futures, or you can do it in GLD, which I'll model it out in both. GLD, maybe come out here. Uh, if you go in the weeklies, you probably have to do the monthly in May, 26 days, maybe buy the 308, sell the 306. You don't see right here, buy the 307, sell the 305. Right now, the market close is trading at 103. The most I would pay for that particular trade is 105 because it's a $2 wide. Generally, I like to pay a buck, you know. give you a 50-50 shot. So with that, or you could do something because it's only 26 days. I like to have at least 30. So maybe you can go 33 days. Now you go into the weekly. I don't know what the bid ask is gonna look like. So you see right here, I'm paying $1 for it. Could do something like that. Or same thing. If we were gonna use the gold futures, I would be coming out maybe 37 days, probably 37, about a 33.60, sell to 33.55. If you do that, this is a large contract. These contracts are pretty large. So you're paying about, basically $5 wide, your max profit is 230, max loss is 260. So you got to pay 260 for it. That's almost like paying basically 500. You want to pay about 250. You're going to be paying about 260 for this. Not bad. Not bad at all. You could probably move this around and you may be able to get right close at 250 when the actual New York session opens. But this is either one of these trades is something, and at that point, you just need a quick pop to the downside. You don't need a big move. You need a quick pop to the downside, and then you can close your spread out. Once you put it on, you can also put in to close it out to buy the trade back. So let's go to GLD. Just easier to make an example of. Like once I bought this, right? Then I would just come in here and do the opposite of it. So like you would have something like you would sell this and then buy this back, and you would put it in for whatever you want to make. So if you're paying 103 for it, you probably want to sell it for what, 155, make about $52. You would put that sale in for 1.55. So that's how you would do it. And whenever you got that sell off, you wouldn't have to be sitting at your computer. It'll automatically close that trade out for you. So basically, that's what I'm looking at this week. I'm looking at the SPY. I'm looking at QQQ. I'm trying to see what this trading range is gonna look like this week right here. Are we gonna get a move out of the Qs? Similar, if we pull up the SPY, same type of setup. Which way we gonna go? I got a real good feeling that either one of those, if one go one way, they both gonna go, and if they both go, then Boeing should move as well. This ADM Archer-Daniels-Midland company should move as well. Looking at it, I like it to go to the upside. So either one of those, play either one of those, and then GLD, I am looking at to potentially put something in to get short. Now, some of the other symbols that I had on my YouTube weekly trade list, you can see I had /6E, which is the euro. You see the euro killing it. It hit every level, guys, on my Fibonacci extension. And I was talking about this. You can check the video that I have where it's called There's Always Something to Buy. I do believe I was talking about the euro. And you can see in the video, I was like right here with it. Right. I may link it to this video. I was right here with it. And you can see now, look where it's at. It's all the way up there. So I expect when it hitting these levels right here to maybe go sideways or sell off a little bit. So we'll see. I just don't think I would get long, even though the dollar is selling off and it's a possibility that it could continue to sell off. See, that's why you have the euro going up like it is, because the dollar is selling off. If the dollar continues to sell off, you can still play currencies to the upside. That means, i.e., the euro /6E /6B, which is the British pound or the British pound sterling, /6A. You can see right here, the Aussie dollar is beginning to move. Look at it. I wasn't even intending to look at this, but you can see it breaking out of this range. Hey guys, it breaks here, we could be off to the races. So if the US dollar is going to continue to go down, you can go into the currencies that are opposite the dollar pair it with it, and you can get long those. I probably would not do the euro just because of the move. You may have missed that one. The British pound sterling, I might not do it, but I like the Aussie dollar, the Australian dollar right here coming out of this range to go higher. Let's look at the Canadian dollar. Already made this move. You can see right here, I drew the triangle here, pull back, retest. Boom, here we go. So you got the Canadian dollars. Look at the yen. Look at the Japanese yen. So all of these currencies are strengthening against the dollar. So it's possible to still be able to squeeze a little bit out of those. If I was the weakest ones, probably /6A and /6. That's it. I don't even think I would trade C, to be honest with you. I feel like the move is gone. Probably missed these. But with that being said, oh, also, real quick, energy, XLE. I'm gonna add this to my list because I had seen this earlier. XLE. Now, with XLE coming down like this, and you can see we had a little bit of a range. I can see it right now. I'm gonna take these, remove these drawings. Let's put some fresh ones on. Matter of fact, let's hide indicators and everything. Let's get a naked chart. We'll be able to see this range right here that it was trading in. And let's see what we got. Something like so, right? So we got something like that. And then you can see it came down through here and now it's sitting in this area. I wouldn't be surprised if we got something back up into here, right? So this is a 3-year chart, and you can see it just being in this range right here. Maybe it'll come back into this range and fill this gap. Excuse me. And it's above the 9-day on the daily. I could see this going higher. We already had the extended move here, but let's see what we get. Probably can watch oil to see what you think energy is going to do. And right now we can see what oil is doing right here. So it don't look like the oil market is open right now, because this is obviously it's showing the oil market is down. For some reason my chart hasn't updated. Oil market may not be, I'd have to look and see when the oil futures open, but I'm not showing them as being open right now. Obviously, if you see oil breaking up, we should see a nice move in energy. See how similar the charts look? So guys, I'm just showing you some stuff that I'd be looking for. There's always something to do in the market. And hopefully you guys got something out of this. Hit that like button, man. Hit the subscribe button. Me breaking down these charts, going over trades, showing you stuff that I have on. That's how you help the channel. Just hit the like button. I keep everything free. I'm thinking about doing, showing uh my long-term stock plays that I like. I already got the watch list built up, and I'm about to get in there and start doing some buying tomorrow. So maybe I'll do another video tomorrow at the end of the bell, and we'll see how things shake out tomorrow afternoon. That being said, guys, I'm gonna be out. Safe trading. Don't get too big. Watch the big moves. Uh, don't as long as your size is small, you can handle these fluctuations, and you can take these losses. If you got them, and take profit. Take profit. Especially if you're doing like day trading, swing trading. You get some profit, close it out, take it, take the win, and move on to look for another trade. If you're a long-term trader, you're an investor, none of this should phase you. If you're looking at working or investing for the next 10, 20, 30 years, then this shouldn't phase you. You should just, to be honest with you, this is an opportunity to get stocks at cheaper prices like Nvidia. I mean, this is a opportunity. Let's look at the weekly chart and see where Nvidia At one point, Nvidia was already up here at higher than 190. Well, this is a weekly chart, so that's why you see that long wick. And recently we were up around 150. At the start of this January 6th, we were at 150 in Nvidia. It had a high of 153. Now you got Nvidia down around $100. That's $50 off the high for the year. This is a great opportunity if you like Nvidia, if you believe in the company. Tesla, it's been cut damn near in half. Has been cut in half. So you can get some of these stocks that are the companies that you really like. If you like Tesla at 400, then you gotta love it at 241. Then once again, I'm not telling you to buy it. I'm just saying, just thinking, talking out. Got to put that out there. So hey guys, let me get this out to you. I'm gonna go ahead and post it. Let me know what you think. I'm out. Peace.